Good morning, sorry, good evening, everyone. I'm so used to this. So, welcome back to this discussion on audit. Okay, so we are going to start with this new topic today that is about audit reports. Yeah, so I'll just move to this presentation about the audit report. Okay, so this happens to be chapter 8. Now, talking about audit and the audit report, I would say we have now moved on to the stage, or you can say the part of that process wherein the audit is now required to be wrapped up, and along with that the reporting is required to be done. So now during the course of this audit, okay, because it's a process, like we have previously discussed, I'm sure you would have covered a lot of things in relation to audit. So all of your steps when this audit activity is completed comes down to one point, or you can say one stage, that is where the deliverable is required to be given. Yeah, so it's like for this engagement. Yeah, so when the client has engaged an auditor, so what was the purpose? The purpose was to get the audit completed in relation to the financial statements. And once that audit is completed, the only deliverable which the auditor is required to give happens to be the audit report. Yeah. So you can just understand the importance of this audit report. That in respect of all these efforts which the client would have made, which the engagement team, means the audit team, would have made, plus in respect of this fee which the auditor will charge, what is it that the auditor is going to provide to the entity or to the company or to the client? There's only one deliverable, and that happens to be the audit report. Okay, so that's why this is extremely important. Yeah. Now the point is that what is this audit report all about? So when we are talking about audit report, is this any sort of document, or is this any sort of letter which is required to be given? So we'll talk about it as to how this audit report is required to be eventually delivered to the client. So there is again a prescribed mechanism. You can say there is again a prescribed format in which this report, this kind of report, is required to be provided by the auditor to the auditee or to the client. Yeah. But one thing is for sure, that as far as auditor is concerned, this is the only thing which is flowing from the auditor to the entity. Okay, so of course you can say that during the course of audit, auditor will perform a lot of activities. Yeah, so it's all about providing services, but eventually in respect of all of those services which are provided, all of those efforts which are made by the auditor, what is it that is moving out from the auditor to the client in some tangible format? That is what we call as audit report. Okay, now when we talk about this audit report, in respect of audit report, basically we are not talking about only one auditing standard, because as we'll move further, you'll understand that various types of reporting requirements are there. Okay, now what do you mean by reporting requirements? It means that once the audit is completed, once everything is done from the auditor's side, so now the report which the auditor is required to provide will of course be of one format. There is one prescribed format as we discussed. But in respect of that report, what is required to be mentioned means what all things, what all reporting requirements are included therein, they are not flowing from only one auditing standard. So there are multiple auditing standards which deal with those requirements. Okay, so let's try to quickly flip through some of those requirements. Okay, now we have SA 700. Yeah, so this is auditing standard. Now this is an auditing standard which talks about audit report. means how the auditor will form an opinion. Because in terms of the audit report, in terms of this audit process, what is it that the auditor is required to provide? Auditor is required to provide his opinion, because that's why auditor has been engaged by the client. Yeah. So now how that opinion is required to be formed, what all things will part of that opinion, what all other things are required to be included in the audit report, means the form, the content, all of these things are covered by this particular auditing standard. So this is one. Okay. Then we have another auditing standard. Now this auditing standard deals with one specific aspect of the audit report. And what is that part called as? CAM, Key Audit Matters. Now, a very interesting requirement which has been included in the audit report. So it's a specific section, you can say. As of now, you can just say that it's one reporting requirement. So let's suppose if there's a form, or if let's suppose there's a document. So in that document, one of the section happens to be key audit matters. Now, in respect of this key audit matter, which is very, very commonly called as CAM. Okay, so this is very, very commonly called as CAM, or you can say CAM reporting. Now, for this, there is a dedicated auditing standard. Yeah, so which means that it's not limited to only one auditing standard, there is another auditing standard. Fine. Then, if let's suppose during the course of audit, you come across some errors. Okay. Now, errors means misstatements. Yes or no? Yeah. So, will it be appropriate to call the error as misstatement? Tell me quickly, everyone. So, if we use this term misstatement for the error, do you think that will be appropriate? What are your thoughts? Quickly, over to you. Yes? Great. So, Dilip says yes. Very good. I think Aisha and Preeti Apu, they have the same answer. Very good. Now, if let's suppose audit activity has been completed, means auditor is now through. Auditor has completed everything which was required to be done. Okay. And after completion, auditor has observed that there are a lot of errors. Or maybe there are few errors, but of significant amount. In that case, what will happen? So can you tell me if there are some errors even after the completion of the audit which exist in the financial statements? So what's the course of action which the auditor needs to follow? Tell me. So what is the first thing auditor will want to do in such a case? Tameshwari is saying amendment. Okay. Hardik says we have to perform further audit procedures. So let's suppose that is also done. Pranav says auditor can communicate those errors to the management. Very good. So you are right that auditor will communicate these errors to the management. But what is the objective of that communication? Can you tell me? Manvi is saying amend the audit report. Of course, that can be done. But before that, before you get on to the reporting, okay, so let's suppose before this report is issued, if there are errors, so what is it that the auditor will want to do? Very good. So Hardik says to ask the management to rectify that. Yes or no? Yeah. So what is the first course of action that the auditor will have? That reach out to the management, reach out to the personnel, and ask them to rectify those errors. Yes or no? Yeah. Because what is the objective of the audit? Objective of the audit is to ensure that the financial statements are free from material misstatement. Yes or no? Financial statements are free from material misstatement. Okay. But at times, it may happen that let's suppose auditor has pointed out some error. Okay. But the management doesn't agree to that. For example, revenue has been recorded by the company in a certain manner. Okay. but the auditor believes that the revenue recognition criteria which the company has adopted is not appropriate. Okay, then you may have a question that is it not reflected in the accounting policy of the company? Yes, it's there. It's reflected in the accounting policy of the company as well. But even if you talk about that accounting policy of the company, that is not fully appropriate. Okay. So now such type of situations may arise at times. Yeah. So wherein if you look at the management, so they are thinking that whatever they have done is all right. And if you look at the perspective of the auditor believes no, his assessment, his evaluation is appropriate. Yeah. So they are standing against each other. So there's a conflict. So conflict doesn't mean they are fighting, means there's a difference of opinion. There's a difference of opinion. So is it possible or not? So let's suppose if two parties are working together, if two persons are working together, so is it possible? So can we have that situation or not? Tambeshwari says management gives appropriate reason, then the auditor should be satisfied. Yes, I agree with you. But what if the auditor is not getting satisfied? Okay, so Pallavi says yes, it's possible. Yeah. So at times there could be a situation that the management is trying to convince the auditor, but the auditor is not getting satisfied. Why? Because it's not about getting rigid on a point, but it's all about forming an opinion. Okay, it's all about their evaluation because there could be certain matters wherein judgment is required, and the judgment of the management and the auditor could be different. Yes or no? So now in those cases, errors are there, errors are significant. Auditor has asked the management, but the management is not ready to move. Means management is not ready to rectify those errors. Why? Because management doesn't consider those errors to be errors. Okay. Or it may be that the management is aware that these are errors, but still the management wants to continue with that. Okay. So now in such a case, okay, so now it's a question for you, and I just want to understand, as around your thought process, huh? Because you have done a lot on this audit. In such a case, if let's suppose you come across such a situation wherein the management is not ready to rectify those errors, so can the auditor make all of those rectification in the financial statements on his own? So can the auditor ask the management or request the management, okay, no worries, if you are not ready to do that, no problem, I'll do that. Yeah. So is that course of action available to the auditor? Apur says no. So can you tell me why no? Why no? Sanya says because that's not the responsibility of the auditor. Very good. So whose responsibility is that? Preeti says it's the responsibility of the management. Fine. But the management is not ready. In such a case, what do you do? In such a case, what do you do? In such a case, you need to remember one point that financial statements are owned by the company, means they belong to the company. Auditor is not there to prepare them. Auditor is only there to review them, audit them, examine them. Okay. So that's why if there are errors in those financial statements, the only course of action which is available to the auditor is to request the management to rectify. Auditor cannot do that rectification himself. Yes or no? Why? Because ultimately, whatever is passed as an accounting entry or in terms of the overall outcome of those financial statements is responsibility of whom? That's the responsibility of the management. Means management is the owner of that. Management is the party who has prepared that. Okay. So the auditor cannot become the preparer. by passing all of those rectification entries. Understood? In such a case, what is the course of action which will get left to the auditor? Only one, and that is to communicate. Okay, but to whom? He has already communicated to the management. So he'll now communicate to whom? Who have engaged the auditors. And who engages the auditors? It's the shareholders. It's the users of the financial statements. Okay, so that's why for communication to them, auditor will have to report those errors in its audit report. Okay. Now, reporting of all of those errors, whether those are significant or of some other nature, there are again various types of errors and various types of reporting requirements accordingly. Now, that is again covered by another auditing standard. Yeah. Sometimes what may happen is maybe there is something in the financial statements or there is some transaction which has taken place during the year, or maybe there is an event which has taken place over which auditor has no concern. Okay, so now we are just moving further. We are just moving to a stage wherein the errors have been discussed. So I'm talking about a different situation altogether now. Okay, so at times there could be a situation which the auditor wants to highlight. Why? Because that is considered to be important. So if let's suppose there's something which you like to communicate or you like to highlight, so what will you do? You will use a highlighter in your exam, or you will make it bold. You will write it in capital letters. Yeah. So these are some of the ways which are available. Yes or no? Yeah. Palvi says you can underline that. Of course, yes. Yeah. So there are various ways. So if required to communicate, if required to highlight something, so these are some of the ways which are available to you. Similarly, for an auditor, there is again a specified mechanism which is provided. And what is that? That is what is called as emphasis of matter. Okay. In which case, if the auditor wants to highlight something in the financial statements to the users of the financial statements, and also clarifying that there is no problem. Okay. So auditor doesn't want to report any error. Auditor is saying that please don't worry, there is no error. Okay. So I'm not saying that there is something wrong in the financial statements, but there is something which is very, very significant, which is very, very important for you to understand today. So that is again communicated, and for that again a separate auditing standard has been provided which will deal with some of those requirements. Okay. Now similarly, in the auditor's report, there are various regulatory requirements which are required to be taken care of, which are coming from the Companies Act. Okay. So that again is required to be looked at by the auditor, because if there's a specific reporting requirement on the part of the auditor, so of course audit report is required to be provided. But if let's suppose the Companies Act says that the auditor needs to specify this point, or auditor needs to explain this point, auditor needs to comment on this point, so will the auditor be required to do that or not? The answer is yes. Okay, so now all of those things are also included in the auditor's reporting requirements, which could be in the form of CARO. If you have heard about CARO, if not, don't worry, we'll talk about that. CARO happens to be one of the reporting requirements, Companies Auditors Report Order, which flows from Companies Act. Similarly, there are various other reporting requirements which flow from Companies Act, which the auditor is required to include in his audit report or in his reporting requirements. So those again will have to understand. Yeah, so there are a lot of requirements in relation to the audit report, or you can say in relation to the reporting particularly. So that's why this happens to be extremely important area. In fact, all of the auditors' efforts will come down to this stage. Why? Because if, let's suppose, if everything has been done in an appropriate manner, but eventually, for some reason, if this reporting goes wrong, then what will happen? All of those efforts will get wasted. Yes or no? Yeah. So let's suppose if you are preparing very hard for your examination, okay, you have done a lot of work, everything you have performed, but at the time of examination, if you are not able to answer appropriately for some reason, so what will happen? What will happen? Tell me. Your efforts will get wasted. Yes or no? Tell me. So let's suppose you have done all the hard work, you planned everything appropriately, you made sure that everything you prepared. Yeah. But at the time of examination, okay, something which you planned, something which you desired couldn't be executed in an appropriate manner. So what will happen? So will those efforts be of any relevance? The answer is not really. Why? Because eventually the outcome is what matters. Yes or no? Eventually the outcome is what matters. Yeah. Of course, that outcome will be dependent on all of those efforts, which are extremely important. But it's the outcome which is visible. Yes. Yeah. So same is the case of audit. After doing all of those efforts, it's the audit report which the client wants, which he is looking at, which he is looking for. Yeah. So that's why, once again, you can just understand how important is this document, and there are significant requirements which have been placed in respect of reporting on this. Okay. Yeah. All right. So now let's try to understand some of the things that we plan to cover. So as we discussed, we'll talk about this reporting requirement, which will include this expression of opinion, which could be in the form of modifications, okay, which could be in the form of CAM, or which could be in the form of emphasis of matter, or all of those things which are required to be looked at. Now let's quickly look at the requirements in relation to this audit. Okay, so what we will do is we will just quickly touch upon the objective of the audit once again. Yeah, because all of those requirements will flow from the objective. Yeah, so let's try to spend some time on this. So what was the objective of the audit? Objective of the audit was to form an opinion. So can you tell me what is the meaning of opinion? So what does it mean? So when you say to form an opinion, what does it mean? What does it include? Okay, and how do you explain this? Preeti says it's all about giving your views. All right. Hardik says expression about the reasonable assurance. Pranav says express a view on the financial statements. Great. Shini says favorable or unfavorable decisions. Okay. See, in the context of audit, you need to comment. Tambeshwari says financial statements for appropriate or significant opinion given by the auditor. Pallavi says declaration on the financial statements. Any other thoughts quickly on this? So what is this opinion which the auditor is required to provide? I'm sure you would have covered this in detail. Yes, very good. Philip says whether the misstatements are present in the financial statements or not. Or let me put it in some different words. It means to express an opinion as to whether the financial statements are free from material misstatements or not. Yes or no? Yes or no? Yeah. So that is the objective of the audit. That is the objective of the audit. Now, in this case, we understand what is material. Material means something which is significant, okay, which can influence the decision of the users of the financial statements. That is what you call as significant, or that should be that significant which can impact the decision making, yeah, of the users of the financial statements who are going to rely on this, who are going to use this set of financial statements. Now, if you look at this opinion, now this opinion has to be based on what? Let's try to understand that. This will be based on evaluation of the conclusions drawn from audit evidence obtained. Okay. So there are a couple of questions. Let's try to understand both these one by one. Can you tell me what is this audit evidence which the auditor will obtain? What do you mean by this audit evidence? Over to you. What do you mean by this audit evidence which the auditor will obtain? Over to you quickly. What would you mean by audit evidence? Very good. Shini says supporting documents. Pranav says information used by the auditor which enables the auditor to form an opinion. Okay. What type of information will that be? Tell me, what type of information will that be? Amit says that should be sufficient and appropriate. Very good. Hardik says representation of the management which is gathered from the financial statements. I'll come to this point slightly later. Yes, any more thoughts? So what is that audit evidence? So audit evidence would mean each and everything which the auditor would have checked, which the auditor would have verified, which the auditor would have examined. Yes or no? For example, in case of sales, Shini is saying sales invoices would have been tested. In case of purchases, purchase invoices would have been verified. Yes or no? So all of these documents will become what? Audit evidence. So in respect of various items of the financial statements, whether it is about assets, whether it is about any item of expense, any type of income, any type of disclosure which is given in the financial statements, whether the presentation of an item in the financial statement was appropriate or not. So will you do some work or not? Will you perform some checking? Will you perform some verification or not? Tell me. Yes or no? Yeah. So all of these things that you will do, so you'll look at some of the documents, you'll look at some of the information, you'll ask questions to the company. Yeah, you will perform inquiries from the client personnel. Yes or no? You will do some analysis. You will perform analytical procedures. So all of these things are what? They are nothing but the audit evidence. Understood? So that is what you mean by audit evidence. Correct? Yeah. So now, once you obtain all of these audit evidences, then what will happen? You will draw conclusions. Let's suppose if one of the team member has been assigned sales, means his responsibility is what? He will go and verify sales. Another team member, he has been assigned bank reconciliations. So his role is going to be what? To verify the bank reconciliations, for which those team members will obtain various audit evidences. Yes or no? But once those are obtained, and once they are through with their work, so what will they do? They will come to some conclusions. Yes or no? So what do you mean by conclusion? Conclusion means the final outcome they will derive. Yeah. Or they will just say that, yes, of course, bank reconciliations are okay. Or maybe the engagement team member will say, okay, I have verified this expense and this looks fine. Okay. So there is no error. There is no sort of error. Or maybe I have looked at the disclosures in the financial statements. appropriate disclosures have been given by the company in its financial statements. Yeah, maybe the format of the P&L which is required to be followed as per the requirements of Schedule 3 to the Companies Act. Yes, so that format was absolutely correct. Yeah, so these are the conclusions. Similarly, if you find out some error, let's suppose employee cost was underbooked by say rupees 50 lakhs. So that is also a conclusion. That is also a conclusion. Yes or no? So now in respect of various items which will be verified, for which audit evidences will be obtained, what will happen? So you can just look at all of these stages, huh? So let's try to evaluate all of these stages. Now what will you do? First of all, what do you do? You obtain audit evidences, correct? Through the audit evidences, what do you do? You will reach some conclusions in respect of various areas, various matters. Yeah. Now, all of these conclusions that you draw in respect of various areas which are there in the financial statements, what is going to happen? You will form an opinion. Yeah. So let's suppose you happen to be the auditor. Let's suppose you are the audit partner. So you'll look at, let's suppose, 50 areas. So you'll say, okay, on an overall basis, it looks fine to me. Huh? So financial statements, it appears, are giving a true and fair view. And when do you say that? When there are no material misstatement therein. Correct? Correct? When you say that there are no material misstatements in those financial statements. Yes or no? Yes or no? Correct? Now, this opinion standard requires has to be given in writing. Now, can we just go and verbally communicate to the client that yes, we have looked at everything? So let's suppose we are the auditor. Can we just go talk to them? Yes, we have looked at everything. Everything is okay. Huh? So everything is fine in the financial statements. You take our words and it's good to go. Can we say that? The answer is no. Answer is no. So verbally the things will not work. Okay. So that's why this opinion that we are talking about has to be in writing always. Okay, so this has to be in writing always. Yeah, so in no way this can be given orally. So of course this communication can be done. It doesn't mean that you will not communicate, you will not discuss that verbally. All of these things can be done, but eventually its final outcome has to be presented in writing also. So I think I had this question from Preeti. So she's asking, sir, can the conclusion be drawn by orally the evidence? See, I would say in this respect, you need to go back to that stage. Okay, so if you remember, there were few stages of audit that we discussed. Okay, so when you started off, do you remember there are 4 stages in an audit? Quickly, anyone having any thoughts? So whenever it comes to any audit, so broadly there are 4 stages into which you can just segregate. Yes, any thoughts from your side on that? 4 stages. Yeah, so what could be those 4 stages? Very good. So Pranav says one is planning. Great. What are the other stages you will say will exist in an audit? Good. So Preeti says planning strategy. Pallavi says audit program. Great. So let's look at this. Huh? So one is your planning. Like for any project, you will plan something. Then you will start checking, which is called as execution. Okay, so after planning, what do? You get on to the execution. You start the field work, you start the verification, you start the testing. What is that? Okay, when you are performing your analytical procedures, when you are performing substantive audit procedures, so that substantive testing, that analytical testing, all of those things, what do you call it as? Execution. Correct. Now, this execution and planning, once this is through, or when you will just keep getting it with it, okay, let's suppose when you are done with this, what do you call it as? Conclusions. Okay, so you are drawing conclusions, and once the conclusions are drawn, that is when you move on to the reporting. Okay, so therefore, we can just broadly say that there are 4 stages. Now, please remember, all of these are interlinked. Why? Because they will always go hand in hand. Yeah, so some of these things could always be sequential, but you need to go hand in hand. Now, coming back to the question which has been asked. Okay, so now she's asking, can we just move on to this audit evidence, or can we just rely on that audit evidence which has been obtained? Okay, which has been obtained. Can we just simply consider that audit evidence to be more of, uh, say, in without writing means, if that is orally obtained, so can we consider that? The answer is no. The answer is no. Yeah, so every time when the audit evidence is obtained, every time when the audit evidence is obtained, so you need to look at it. Okay, you need to obtain that audit evidence in writing, means some documents, some supporting documents. So all of those things you should always be obtaining. Yeah. So once you are through with that, once you have obtained with that, only then you can say that yes, everything which was required to be obtained has actually been obtained by you. Okay. So that's how you need to look at it. Fine. Yeah. So I understand Aditya has a question. Yes, Aditya, I understand you have a question. Yes, any questions, any doubts so far? See, we have just started off. Huh? Anyways, we are just discussing the basic stuff. We have not really looked into any sort of technical requirement as such. But still, if you have any questions, any doubts, please let me know. Quickly, huh? Any questions, any doubts? No? All okay? All right, great. All right, so now let's talk about this audit report. Now, in respect of this reporting requirement, we discussed that there's a format, okay, and there's a form. There are some reporting requirements which the auditor needs to follow. So now, what is the format of this audit report? Now, this audit report format has been prescribed. So to begin with, what will you have? You will always have a title. You will always have a title. Means the title is something which is always given to the auditor's report. So that's how you will always begin. Okay. Now, after the title, what is it? You will have addressee. Means to whom is this audit report addressed? Because it's a report, so it must be addressed to someone. Now that will depend on the terms of the engagement. Means as per the terms, as per the engagement letter, auditor is required to give this report to whom. So whether it is meant for users or board of directors, now again that could be varying depending on the type of audit that has been looked at. Third, there will be a subtitle which will talk about a report on the audit. Now, whether it is about financial statements or whether those are standalone or console, or if there is any other information which has been audited. And after that, you move on to the opinion. Okay. So now in this opinion para, or you can say in this section, auditor will talk about the opinion which is required to be given. So what we will do is we'll just do one thing, that all of these sections, opinion, then you will have this basis of opinion to flow, then you will have key audit matters, other information. Then if you look at the format, it requires responsibility of the management. Then you will have auditors responsibilities, and then of course various other legal requirements which could be attached to that. And then at the last, you move on to the signature. Means once this audit report is completed, auditor is required to sign that. Okay. And also put the date and place. Means on which date this audit report has been signed and at what place. Yeah. So all of these things are required to be included by the auditor in the auditor's report. Okay. So now what I'll do is I'll just look at one audit report of a company. Okay. So I think it's good to look at the actual audit report. By actual audit report, I mean to say I'll just pick up one company, and for that company will try to understand as to how does this audit report really looks like. Because once you get that feeler, you will get more clarity. Okay. And within that audit report, we'll try to understand all of those requirements in relation to various sections. Okay. Whether that is about opinion, whether that is about CAM, or all of those things. Fine. Yeah. So we plan to get into that. All right. So let's move on to that audit report now. Just give me a minute. All right. So I think there are a few queries. So let me just look at some of your queries. Okay. So Hardik is asking, sir, prelims is also there. So fifth stage, I couldn't understand. Maybe you can just clarify on this. Uh, Shini is asking if possible public company audit report. See, the audit report that we are going to look at now. Okay, so that is something which is available in the public domain. So what I've done is, yeah, so I'm just hoping this is visible to everyone. Okay, I'll just increase the size. Yeah, hopefully visible to everyone. Quickly, please confirm. Great. Visible? Perfect. Great. So now what I have done is I have picked up this annual report of TCS. Okay. And because it's a listed company, so that's why its annual report is available in the public domain. So if you want, you can just go download annual report of any company. Okay. Whether it is listed or unlisted. Now, if that is listed, that is available in the public domain, you can just do Google and you can go to their website. On the website, you can just download the annual report. And in the annual report, you will have this complete set of financial statements, including the audit report. If that happens to be, say, unlisted private limited, that again is available. Okay, but currently, this is the one I have picked up. And there's no preference as such. It's by chance that I have picked this company. Because this company has got good disclosures, etc. So this will meet our requirement. Okay. So now, what is the first thing? So now, in the audit report that we look at, if you remember, there were some components. Okay. So you begin with the title. Then you will have addressee. Then you will have addressee. So what is the title? Independent Auditor's Report. Of course, this is on the standalone financial statements. So that's why they have specified. Why they have specified? Because this company must be having various group companies, must be having subsidiaries, associate JVs, because they may be preparing consolidated financial statements as well. So that's why they have specified this. Okay, but this is not really relevant for us as of now. Okay. Now, what is the second part? To give the addressee. Now, who is the addressee? So it is addressed to the members of the company. Can you see this? So it is addressed to the members of the company. And then third point, there is a subtitle. So it talks about the report, means if the report is there, on which thing this report has been included. So it's the report on the audit of financial statements of the company. Okay. Yeah. Please remember that the audit report format is fixed. The order that we are discussing is also fixed. Okay. So some of you who are thinking, can we just change this order? The answer is no. Okay. All of these sections, all of these orders that we are going to look at will always remain fixed. Yeah. So you can also say it's a kind of format which is available. So every time the audit report is required to be issued, so this is the form. Okay. Of course, in this format, the font size, the font type, the way it's been laid out, all of those things can be changed, but the order has to remain same. Okay. Now, see, now comes the most important part of the audit, and that is what you call as opinion. Okay. That is what you call as opinion. Now, to begin with, every time there will be an audit report, every time there will be an audit report. So what will you have? You will have audit opinion to begin with. Okay. And let's try to understand as to what is going to be included in the audit opinion. In the audit opinion, auditor will comment about the financial statements, about the company, about the period for which the audit has been performed. Okay. About various things which those financial statements will include. About the opinion, of course, means in relation to the audit which the auditor has performed, whether he is fine with that or not, means about the truth and fairness of the set of financial statements. Okay. So let's try to understand this. So what we'll do is we'll just go through this para to get some more clarity around this. So it says we have audited the standalone financial statements of TCS, which comprise, now please understand, even though financial statements are mentioned, now it will clarify what do they include, which comprise balance sheet as at 31st March 24 and statement of profit and loss, statement of profit and loss, statement of changes in equity. You can just ignore it because under Indian GAAP you don't get to see this. Statement of cash flows for the year then ended, and notes to the financial statements, including accounting policies and other explanatory information. Yeah. So can you see how precisely auditor is specifying everything? So can you tell me why is this important? So why all of these components have been specified? So to begin with, if you look at the audit report, auditor has clarified, we have audited the financial statements. So why there is a need to explain what all components are covered in that set of financial statements? Tell me, any thoughts? Why is that required, or why do you think that would have been done by the auditor? Is that not really understood? Very good. Hardik says so that the reader can easily understand about it. Okay. Pranav says to provide the basis. Of course, because when the financial statements are getting audited, so this term is not known to everyone. Not everyone understands what this financial statement may include. Yes or no? Yeah. What components are going to be included therein? So even though legally, if you'll go with this, or maybe even if we go by the practices, so it should include all of these things, but still it's important the auditor should clarify. It has to be precisely given. Understood? Yeah. All right. Now, When the auditor has begun, what was the objective? Auditor should have commented that what is the outcome. But if you read this audit opinion, auditor has not commented. So is that missed out? The answer is no. Why? Because first of all, auditor has clarified. Auditor has clarified that this is what I have audited. Okay. And then auditor will say, in our opinion. So can you see this? So in the opinion section, there are going to be two paras. One, wherein the auditor will first of all explain that what is it that he has audited. That what is it that he has audited. And once that explanation is completed, after that, auditor will move on to the next part. And what is that next part? About the opinion. Okay, so let's try to understand as to how the auditor will explain this. In our opinion, and to the best of our information, and according to the explanations given to us. Okay, so I'm reading this para. The aforesaid financial statements give the information required by the Companies Act in the manner so required. Means whatever Companies Act requires, that's been taken care of. And give a true and fair view. So that's the most important part, isn't it? Give a true and fair view in conformity with accounting principles generally accepted in India of the state of affairs of the company. So what do you mean by this? Balance sheet. Of its profit means statement of profit and loss. Changes in equity in respect of this statement, they have talked about it. Statement of change in equity. Of its cash flows means in respect of statement of cash flows for the year ended on that date. Means even though the auditor has in the first para clarified that he has audited all of these components and along with those periods, while answering, while commenting, while giving the opinion, once again, auditor is explaining each and every component clearly that in the balance sheet he is okay. Why? Because state of affairs is fine. Profit and loss seems okay. Cash flows seem okay for the year that ended. Means for the year ended 31st March 2024. Understood? Everyone clear? Yeah. So now in this case, the opinion that we have looked at, was there any problem which the auditor has reported? Tell me. So if you look at this opinion para, could you find any problem being reported by the auditor? Tell me, over to you. Pallavi says no. Great. Pranav says no. Hardik says no. What about others? I think Kiran also mentioned something. I'll come to that point. Great. Amar, Ratimalini, Tambeshwari, they are saying no. Now, whenever we have this type of opinion where nothing negative has been commented, nothing negative means if you look at this particular para, everything looks okay. Yes or no? Everything looks okay. Means auditor is fine with everything. And that is why he has written this. If you read this line, give a true and fair view. So what does it mean? That as regards the audit which has been performed, everything looks okay to the auditor. Means he is completely fine with this. Yeah. So this type of opinion is technically also termed as unmodified opinion. Understood? Unmodified opinion. So what is the meaning of unmodified opinion? You can say clean opinion. Means there is no problem in the financial statements. And when we are talking about problem, it means there is no material misstatement in the financial statements. Okay. So you may just note this point, unmodified opinion. Now, if you look at the audit report, on the audit report, auditor will not write unmodified opinion. No. If you read this subheader, so if you look at the audit report, for every para, for every section, what will you find? There will always be a subhead. And why is that required? So that the user can understand. Now, if you look at this report is running into pages. Okay, so when the user will read this report, so you can always look at those subheads. Yeah. Now, this subhead, whenever this opinion subhead is given, it doesn't say modified, it doesn't say emphasis of matter. Okay, so in such a case, what will you assume? You'll always assume, you'll always need to understand that this is a clean opinion. So one can say that if somebody doesn't read this para, okay, I'm talking about this opinion para. If you just simply look at this subheader opinion, wherein no modification has been specified, or if the word modified opinion is not mentioned, then what would it mean? It would mean that the opinion is clean, that the opinion is unmodified. Clear on this? Everyone clear on this? Tell me quickly. Everyone clear? Any questions? Yeah? Great. So it seems everyone is clear. Okay. So Kiran mentioned that TCS generally issues the financial statements within 15 days. So their reporting is quite fast. Yes, you are absolutely correct. How can they compile? So that's the efficiency. Huh? So that is what they plan. So you can just simply say that it's all about efficiency. Huh? So that's how they are working. So Shini is asking, sir, if it is modified opinion, then what would be the wordings? Modified opinion. Okay, and we are going to look at all of those situations. Now, depending on the type of modification it will be, the wordings will change. Okay, but as of now, you can just simply understand that this subheader will not be a single word opinion. Okay, it could be a qualified opinion, it could be an adverse opinion, it could be a disclaimer. Yeah, so that's how it will be written, means subheader. Okay, every time you will get to see that. We'll also look at those types of audit reports, but later on, not right now. Huh? Okay, as of now, the report that we are looking at is the one which is clean. Okay, in which there is no modification right now. Okay, Tambeshwari is saying if there is going concern that time, what word do we use? I'll come to that. Yeah. Hardik is saying, sir, but usually always there will not be a clean report. If the report is not clean, so I can understand. There are a lot of questions around this report if that is not clean. But please understand, as of now, what we will do is we'll first of all look at the clean report. We'll try to understand all of those sections, all of those sort of components which are there in the audit report. Okay. Once we are through with that, then we'll move on to the modification. If we'll keep discussing that alongside, so it will create a lot of confusion. Okay. Yeah. So please understand, there's a lot of time we are going to cover all of those things. Don't worry. Fine. But later on, not right now. Okay. Now moving on to the next section. Now, please understand that currently, if you look at the audit report, so what did we see? That the auditor has given his opinion. Okay. Now, as a next step, what is it that the auditor will do? Auditor will give the basis for this opinion. So every time the opinion will be given, auditor will give the basis for that opinion. If that is modified, auditor will give the basis for modified opinion. If that is not modified, means if that is clean, unmodified, there again, the basis will be given. Yeah. So this basis will of course come next, because to begin with, what is it that the client wants, or what is it that any user will want to see? To look at the opinion always. Yeah. And once the opinion is looked at, the next section will be about the basis for opinion. So let's try to look at this basis for opinion now. Okay. Now, so let's understand as to what is included in this section, basis for opinion. So let's read this and then we'll come to all of those points. Fine. So now the auditor is saying we conducted our audit in accordance with standards of auditing specified under section 143 of the Act. Okay, so auditor is now explaining as to how this opinion has been derived. Our responsibilities under those auditing standards are further described in auditor's responsibility for audit of financial statements section of our report. So the auditor is now saying that all the responsibilities of the auditor are further described in greater detail. And for that, auditor is giving the reference of this audit report. Means auditor says when you will move further, so there will be a separate section about what? His responsibilities, wherein each and everything will be described. So in detail that will be explained. Understood? Yeah. Then the auditor talks about the most important point. And what is that? Now, in relation to the audit, can you tell me what is the most important aspect of the auditor? Anyone? Any thoughts? So when it comes to the audit, what is the most important aspect as around the auditor? Very good. Pranav says independence. Extremely important. In fact, if you look at this auditor's report, how does it really start? It says independent auditor's report. Can you see this or not? Yeah? Can you see this? It says independent auditor's report. Yes or no? Yeah? So therefore, as a next step, what auditor will do is auditor will say we are independent of the company in accordance with the code of ethics issued by ICAI together with ethical requirements which are relevant to our audit of the financial statements under the provisions of the Act, any rules thereunder, and we have fulfilled our ethical responsibilities in accordance with these requirements and the code of ethics. Okay. So now in this para, if you'll understand, first of all, auditor said that I have used my tools. So what are the tools for the auditor? Tell me. So what are the tools for the auditor? What are the tools which are available to the auditor? Auditing standards. Very good. So Amar says auditing standards. First of all, how did the explanation start? Auditor said, I have used the auditing standards. And those auditing standards are prescribed by law. Then it says, if you want to get into the detail, don't worry. There's a separate section in the report. Go and read that section. In that, you can read that in detail. Then it says that as regards the audit, I'm completely independent. I have ensured that the code of ethics are taken care of by me. Further, he says, we believe that the audit evidence we have obtained is sufficient and appropriate. Now, this is again very, very important point. Sufficient and appropriate to provide a basis for our opinion on the financial statements. So can you tell me the relevance of these two terms, sufficient and appropriate? So why did the auditor said that audit evidence is sufficient and appropriate? Why did he not only say that I have obtained the audit evidence? Tell me. Anyone? Any thoughts from your side? Tell me quickly. Okay, so Pallavi says sufficient means he's talking about quantum. and appropriate means he's talking about quality. Yeah. Now, in the context of audit, I'm sure you have covered this. Audit evidence is required to be obtained, and that is what we just discussed also. But as around that audit and as around that audit evidence, it's important to ensure that such audit evidence is sufficient. Means, if let's suppose revenue was required to be tested, then 100 samples have been obtained. So what do you mean by that? Quantity. And those 100 samples included top 25 items. Yeah, that ensured random selection was there, so that the sample was representative of the population. Okay. Or if there was some any other criteria which should have been followed for picking up that sample, that was done. Means we are talking about quality also. Okay, so it's not that we have just looked at the volume or the quantum of samples have been checked. No, along with the quantum, we have also looked at the quality of the samples. Yeah, so it has been a combination of these two, and that's how the entire testing, entire audit work has been performed. Okay, clear on this? Yeah. So now, in this case, auditor has just explained everything about the audit, but there are a lot of other responsibilities that he would have played and which are going to come later. So we'll talk about that section also separately. Any questions, any doubts so far? Quickly, any questions, any doubts? So what we will do is we'll also look at some questions now. But if you have any questions, any doubts, please let me know. Yeah, any questions? Okay, Manvi is asking, what do you mean by code of ethics? You can say that there are certain principles, okay, which the auditor is required to maintain. Yeah, so ethics, you can just understand that independence happens to be one of the things which the auditor needs to take care of. Okay, similarly, objectivity, auditor needs to take care of. Now, as regards the audit, can the auditor prepare the financial statements? The answer is no. So that is also in a way, he is ensuring that he is ethical. So he has to be ethical in terms of the activities he'll perform. Yeah. So throughout the course of audit, in fact, before taking up audit, he has to ensure that there is no violation as around those ethics. Okay. Through which he can maintain his independence. Yeah. So maybe briefly, this is how you can just talk about ethics right now. Yeah. That is very, very important to maintain the independence of the auditor. Okay, Srini is asking, can you please explain section 143 subsection 10? See, section 143 subsection 10 talks about the applicability of the auditing standards as around the audit of the financial statements of a company. Okay, so what is it that the auditor has clarified? Auditor is saying that these auditing standards which I am using, these are prescribed by the law. And he is giving the reference of that particular section of the Companies Act. Okay, so that is the meaning of this particular section over here. Understood? Yeah, clear everyone? Any questions? No? All right, so I think we can look at a couple of questions now. And what I'll do is I'll just move on to your study material only. Yeah, so we have got one question. I think you can just look at it. Yes, over to you now. Yeah. Messrs. Amitabh and Associates are the statutory auditors of Ringston Limited, which is a company engaged in the business of manufacture of pen drives. Auditor has started drafting the audit report for the financial year. So whatever is the financial year, okay? It's 21-22. CA Amitabh is the engagement partner. He's of the view that the financial statements of Ringston represent a true and fair view. Okay. You are required to draft the opinion pair. Yes, over to you. So how will you draft the opinion para? I would suggest please don't look at the solution which is given in the material. Please try to draft it on your own. I also understand that you may not be following the exact technical language, which is absolutely okay. So don't worry. Yes, try to draft that para and share with me. Over to you. Yes. Now, as around the opinion para we just looked at, it had two parts. Yeah, so both the parts are required from you. Over to you. Quickly. Over to you quickly. If you can just draft that and share with me. Over to you quickly. Yes. Now, as around the opinion para, which is required to be drafted, can you do that and share that with me? Yes. Over to you. I'm just hoping you are drafting this and sharing with me. Yeah, so need not send both the parts. You can just send one part first and the second part later on. Okay, so maybe in two parts you can send it, because some of you may be typing, so I understand you'll take some time, but do that quickly and send that to me. But don't do this copy paste time if at all you are planning to do that. Okay, so please refrain from that. Try to draft that on your own. Okay, great. So Pranav has shared this, very good. And it doesn't matter whether you are matching the technical language or not, it doesn't matter. So Pranav is saying financial statements of Messrs. Amitabh and Associates present a true and fair view of the state of affairs of the company. Okay. Hence, we express unmodified opinion. So I think Pranav, in this case, you need to be careful on one point. What is that? That the financial statement should be of the company, not the auditor. Yes or no? Yeah. So maybe you'd like to just revisit this. Yeah. Okay. So Tambeshri says opinion given by the auditor is true and fair. Okay. Great. But you need to elaborate this. So first part was what? First part was about various things which the auditor would have covered. Yeah. So like Nitin mentions, so he says that opinion will include the components. So auditor will say we have audited the financial statements which include various components. Yes or no? And after that, he will get on to the expression of the opinion. Correct? Okay, so then I think Srini has also answered this. We have audited the financial statements and found that there is no material misstatement as at the end of the year. Fine. Apur then I think has briefly touched upon this. Great. Uh, okay, so then I think Hardik has also tried to cover this. Very good. Now, a lot of responses which I can see, you are not exactly matching the technical requirement, which is absolutely okay. Huh? So as you will practice, you will also be moving closer. But please understand, if you don't match that language, it doesn't matter. Yeah, important thing is your knowledge is required to be demonstrated. You should be clear in terms of what is really required to be communicated here. Okay, then I think various parts you have covered. Okay, Kasak has also shared this, very good. Now Asha has also shared. Asha is saying we have audited the financial statements of Ringston Limited. It is giving true and fair view. Not bad. Good. So great. So Nitin is saying, yes, I'll practice. Yes, very good. Then if you look at Kiran, so Kiran is saying, we have audited the Rington Limited financial statements for the year 21-22. That is again very important. So the period, you need to specify the period. That is again extremely important. And they are free from material misstatement. Nancy has also tried to answer this. Nancy is saying, we have audited financial statement of Ringston comprising balance sheet, P&L, notes, other information. Very good. That is also good. Dilip has also answered this. All right, great. So good to see. Very good. So this is how you need to attempt this. Huh? And please remember, when you look at some actual report like the one that we have looked at, so I'm just hoping that you will be able to understand it conceptually. Yeah, because we don't need to mug it up. Yeah, if you understand it conceptually, definitely you will be able to draft the language. Okay, so that's how you should always be looking at it. So then I think I missed the response of Pallavi. So Pallavi has also tried to cover all the aspects, which is again good, very good. Huh? All right, so now we understand as to how this is really required to be drafted. So at the first place, what will you have if you look at the solution? So it will say we have the audited the financial statements comprising of various components. Of course, you'll explain. Yeah. Then it will say, in our opinion, to the best of our information, explanations, the financial statements give true and fair view. So they are in conformity. And then the auditor also will comment on each and every component. I think that is what you missed out, maybe in most of your responses. Huh? Auditor commented on the balance sheet. Can you see this of the state of affairs? Auditor commented on the P&L. He said profit or loss for the year. Yeah. So all of these things he need to comment on. Yes or no? Yeah. So that's how this is required to be drafted. Clear? नितिन इज आस्किंग सर कुछ इंपॉर्टेंट पॉइंट है जो ऑल रिपोर्ट्स में रहेंगे. See, all of those points that I have discussed with you, please remember they are all important. Yeah. So you can't just simply say that. See, actually, if you look at this opinion para, there are two sentences. Yes or no? If you go back to the audit report, or even if you look at the solution which is given in front of you, we have only two sentences. Yeah. So can you further cut it down? The answer is no. Yes or no? Yeah. So if you cut it down further, then of course you are missing out. So let's suppose if you happen to be the auditor and if you cut some aspect in this, so you have missed out on some important thing which needs to be included in the audit report. Okay. So that's how you need to approach this. Fine. All right. So what we will do is we'll look at one more example. Huh? Yeah. So I think you find this to be interesting. Everyone? Yeah. So what we will do is we'll look at one more example. Huh? So there again, you are required to do similar sort of thing, but now the question will be slightly different. So let's understand. Huh? So let's look at the question carefully first of all. Messrs. Kite, Wright and Associates are the statutory auditors of Prime Deluxe Limited for the financial year 21-22. At the time of finalizing the audit report, one of the engagement team members, Mr. Robin, asked the engagement partner, CA Kite, as to what all should be included in the basis of opinion paragraph. The engagement partner, CA Kite, explained the team in detail and asked Mr. Robin. So that explanation is given, and then Robin has been asked to draft the section for the auditor's report of Prime Deluxe Limited on the basis of guidance which has been provided by the engagement partner. Okay. Now I think similar sort of thing I have done for you, because similar to what the engagement partner has done, I have also explained you. I have also given you the guidance as to how the basis of opinion is required to be drafted. Yeah. So along with Robin, can you also draft this basis for opinion para? Over to you. Please remember, you need to draft basis for opinion para. Over to you. I understand this is going to be slightly lengthy. So maybe you can just again break this into parts, share with me. Okay. Yeah. So waiting for you to respond. Now you are required to revert with the basis for opinion para. Basis for opinion para. Okay. So I'm just hoping you are onto this. Please remember basis for opinion para. I think it had four components. Huh? So let me just quickly tell you one. I think it talked about auditing standards. Second, it talked about auditor's responsibilities. Third, it talked about ethics. And fourth, it talked about audit evidence. Yeah, remember those four aspects. Maybe you can just summarize this in this manner. Huh? Great. Hardik has shared this. So Hardik is saying we conducted the audit of Prime Deluxe. Audit is done in accordance with auditing standards. Very good. Auditor is independent in accordance with the ethical requirements. Audit evidence obtained is sufficient and appropriate. Very good. So I think there's one more part that was about auditor's responsibilities, which needs to be specified. Okay. Otherwise, this is very good. I think we have very beautifully summarized all the requirements over here. Of course, you are required to draft that, but as of now, if you are able to summarize all of those requirements, that's still very, very good. Okay. What about others? Quickly. Okay. Kasak says, in our opinion, the financial statements are presenting a true and fair view, follow applicable accounting standards. The report follows code of ethics and is in accordance with auditing standard. So I think this point is correct, except for the first one. Okay, so the first sentence which you are using right now is the expression of opinion, which should be there in the opinion para, not in the basis for opinion para. Okay, so that is what you need to understand. Yeah, so the meaning appears to be somewhat like that. I can understand your thought process. That was not really to give the opinion. Yeah, but that's how you need to cover this. Okay, great. So Pranav, Pallavi, they have also shared. Good. So I think Tambeshwari has also summarized most of these aspects. Again, good. Okay, so Nitin is saying our audit in accordance with financial statements, in accordance with auditing standards. Then ethics and rules are taken care of. We are independent in respect of the ethics. Okay, good. Then I think Yogesh is saying as per, I think that will be very, very limited. Huh? So if you use only this section reference, huh? Of course, you need to cover these four aspects. Maybe if you want to present it even now, so at least those aspects you should tell me. Okay, so that you remember all of those points. Okay, yeah. Then if you look at what Pranav has written, so he says the opinion has been formed by complying with the requirements of auditing standards. Auditor's responsibility is contained in the responsibility section. Auditor is independent of the entity and is in accordance with the code of ethics. Good. And then of course, the last point will be that the audit evidence obtained is sufficient and appropriate. Fine. Yeah, I think similar sort of response is received from Pallavi. Great, very good. Yeah. All right. So I think this is good what we have tried to cover, and this is what you should be looking at. Okay. Yeah. So any questions, any doubts so far? Otherwise, what we can do is we can take a break now. Okay. After the break, we will continue. But if you have any questions so far, Hardik is asking, sir, which essay is for auditor's responsibility? See, all the auditing standards that you cover, they talk about a lot of audit requirements. Okay. Yes. Any more questions? Okay. So I think Dilip has shared his response, but that's good. That's good. Shini is asking, sir, why do we need an opinion and basis for opinion? Because Shrini, if you happen to be the auditor, you have charged the client. Okay, you are getting paid for this. If you have performed the audit, so that's why you have been hired. So let's suppose if there's an auditor, so why would the client hire the auditor? Why would the client engage the auditor? So that the auditor can complete the audit and also provide an opinion. Okay, and if the opinion is required to be provided in writing, so that's what you will write. Okay, so when you say why is this opinion required, So in a way, you are saying why is the audit required? Or if you are saying if the audit is completed but will not give that in writing, why is that required to be in writing? Because that's how you will communicate to the client. Okay. So that's the perspective. Okay. That's the way this audit has to function. Otherwise, how will the auditor communicate to the client? Verbally only. That doesn't work. Understood? So that's the reason. Clear? Clear on this? All right. So I think we can take a break now. Yeah. Okay, so I think Shrini has one more question. She's asking, but in opinion itself, we can mention why. Okay, so she's asking why there are two separate paras, why there are two separate sections. Why not in the opinion only we are talking about? See, just to clarify, huh? So it's like you are dividing that into two parts. Okay, for better presentation, for clarification, because there is going to be user. So let's suppose if you are writing an answer in the examination, so how will you present it better? So one is, let's suppose your response will run into 2 pages. So one way is you will just keep writing everything in a single para. Okay. The other way is you present it better, wherein you are creating separate paras for different thought process that you have in the solution. So which out of these two you think will be more presentable and which will be easy to read for the examiner? Tell me which out of these two will be easy to read for the examiner. Tell me quickly. The one which is given with the pointers, that's what the Hardik says. The one which you separate, it's the same is the case over here. You want to clarify, you want to present it in a better manner. Understood? So that's the whole process. That's the whole idea. So that the user is clear about each and everything which has been conveyed to him. Fine. Okay. All right. So I think we can take a break now. Yeah. All right. So Manish, we can take a break. All right. So, hi. So now moving further. Okay. So we have discussed certain components. Now the next components or the next two components are about going concern, and the other one is about key audit matters. Okay. Now for this key audit matter, there's a separate detailed discussion. Okay. So as of now, we don't plan to cover that in greater detail. As of now, we'll just quickly touch upon that concept. In greater detail, we'll just cover that slightly later. Now, as around the going concern, let's try to understand. Now, what does this section requires? So if let's suppose there is any concern, there's any material uncertainty in relation to the financial statements, in relation to the entity. So what will happen? Now the auditor is required to comment on this. Okay, so in relation to the material uncertainty, what is it that the auditor will clarify? Or you can say the comment on. So he'll say if there is any material uncertainty. Okay. Now, as regards its testing, how would the auditor test it? How would the auditor assess this? All of these aspects are covered in the execution stage. So that is something which you have the or which the auditor has already looked at. Over here, now the auditor needs to comment. Okay, if there are any situations, if there is any event, or if there is any transaction due to which he believes a material uncertainty could be involved. Okay. Now, what does it mean, or what are some of the situations which may bring in this, or which may bring this material uncertainty? We can say, if let's suppose the company has been running into losses, okay, and it's been incurring cash losses, or if let's suppose liquidity of the company is now bad, means company is struggling for funds and there's no visibility as to where do the funds are going to come from. Great. So Hardik says like adverse financial ratio. Yes, of course. See, all of those factors will have to be analyzed by the auditor. The auditor will also have to look at the cash flow projections. Means in the future years, or maybe in the next 5 years, next 6 to 7 years, what are the cash flows? And we are talking about the net cash flows, which the company expects to see. So all of these things are required to be looked at, tested by the auditor, and accordingly, the auditor is required to comment on this. Okay. Pallavi is saying working capital. Yes, of course. So all of these factors will have to be taken care of over there. Yeah. So let's talk about this other section on the CAM. Though we are going to cover this in greater detail, but I think it will be appropriate to just touch upon this aspect now. So what is this CAM? Key audit matters. See, CAM is something which doesn't apply to each and every company. So that's the first part you need to understand. Currently, it's only the listed companies on which CAM is applicable. Okay. So that means for each and every company, you will not have this section. Yeah, it's something which is going to apply only to the listed companies. And in case there's a listed company, what is the requirement over here? The auditor needs to now assess that during the course of his audit, what all have been the key matters. What all have been the key matters which have come across, with which the auditor has dealt with and those matters are required to be mentioned in the auditor's report, or you can say reported in the auditor's report. But please remember, key matters doesn't mean errors. Okay, so I would say they don't mean errors. So if key matters are getting reported, that doesn't mean it's a material misstatement. It simply means that during the course of audit, there were some matters which were quite significant with which auditor had to deal with, and for which the outcome has been such that there is no error involved or no material error involved. Yeah. Even then, because they are of such an importance, that's why auditor is going to report that. Okay. So let's look at this section also. Quickly, we'll just flip through this. Just give me a minute. So we'll go back to the same audit report now. Okay. Now, in this audit report, if you look at this CAM section, key audit matters. Yeah. So in this section, the auditor is saying key audit matters are those matter which in the professional judgment of the auditor were of most significance in relation to the audit of the financial statements. Yeah. And then after that, after this para, auditor also specifies that one should not think that these are modified or auditor is reporting or auditor is commenting on these matters. No, that's why he is clarifying. We do not provide separate opinion on these matters. He is saying our opinion is on the financial statements only. So even though we are explaining these matters, don't think that we are commenting on these matters separately. We are providing our opinion on these matters. Why? Because our opinion is on the financial statements collectively, which will include all of these events, transactions also. Okay. Then in the same section, auditor will explain the matter. Okay. And auditor will also explain as to how that matter has been dealt with. Yeah. So briefly, you can say this is CAM for you, and this happens to be one of the sections. But of course, in greater detail, we'll come to this CAM as to how this is required to be done, how this is required to be assessed. All of those things we'll cover later. Fine. Okay. Now, next section. Next section talks about other information. Now, what is going to be this other information? Other information, we mean to say other information which has been given by the management. For example, if you'll read this, it says company's management, board of directors are responsible for other information. Other information which includes company's annual report, but does not include financial statement and auditor's report there. Company's annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with audit of financial statements, our responsibility is what? To read the other information when it becomes available. And in doing so, consider whether the other information is materially inconsistent with the financial statements, or our knowledge obtained in the audit or otherwise appears to be materially misstated. So what does it mean? So let's try to understand this. So we'll take one example to discuss this. Okay. So let's suppose there is a set of financial statements. Okay. Whenever you will have financial statements, so what will happen? Financial statement will always be made as one annexure. Let's try to look at that annexure once again. Okay, so if you go down now after this report, what will you see? So if you go further, okay, if you go down, so this is the financial statement. Yeah. So these financial statements are starting after the auditor's report. Okay, so we have balance sheet, statement of profit and loss, all of these things will flow. Okay, and what I'll do is I'll just take you to the main report now. Okay, now in this main report, what does it say? It says we have audited the standalone financial statements which comprise so and so, so and so, right? Please remember that every time any financial statements are provided to the users, so they are always provided along with the auditor's report. Always. Okay. So therefore, what do we have? We have financial statements plus the audit report. Okay. So that's how you can say we have this one set available. Correct. So what does this one set comprise of? Audit report and the financial statements. Yeah. So let's suppose you happen to be the stakeholder in this company. Okay. Now in the financial statements, say for example, revenue is mentioned. Say sales are 100 crore. Let's suppose that is the amount of sales. Okay. So where do you get to see this? In the statement of profit and loss. Yeah. Now, if along with this set of financial statements, some other information is also shared with the users of the financial statements. For example, there's an annual report. Okay, now please try to understand this very carefully. Yeah? Say there's an annual report. Now, what do you mean by annual report? You can say it's a document. Okay, so it's a document. This document comprises of various informations. For example, it contains director's report. Okay, so one part of this annual report will have director's report. It will contain MD&A. What is that? Management discussion and analysis. You can say some sort of analysis is done by the management and that is mentioned somewhere. So it's a document which is prepared. Okay. Then in the annual report, you also have the set of financial statements. And let me just call it as audited financial statements. Okay. Now the document which we were looking at, remember we looked at one document. So that document was nothing but an annual report. Yes or no? You remember I talked about an annual report? Yeah. Everyone clear? Yeah. So there was an annual report which included financial statements. Correct? Now, in that annual report, which is a large document, which is running into say 700 pages, 600 pages. Okay. So which is running into hundreds of pages. One of the information is what? Audited financial statements. So that is only one of the information. Along with that, there are various other informations available. Okay. Now, if the user will get to see this audited financial statements, so what will happen? User will access the annual report And if let's suppose you happen to be the user, you are a stakeholder and you are reading the annual report, and let's suppose somewhere in MD&A, okay, let's suppose somewhere over here, sales of this company is mentioned as 110 crore. Yeah, what are the reasons for that? We don't know. Yeah, possible? Yes or no? Though it should not happen, but possible? The answer is yes. And when the same stakeholder or the user reads the financial statements, what will he find? That in the P&L, sale is given as 100 crore. Now, in this case, tell me, will this user in such a case get confused or not? If you happen to be the user of this annual report, okay, user of this annual report who is reading this document, so will you get confused or not? Yeah. In fact, not only confused, the reliability of the information which is provided therein, that will become a question mark. Yeah, that will be subject to a lot of questions. Now, which information is correct out of these two? Whether this is correct or this is correct, or whether both are not correct. Yes or no? Yeah. To avoid this, a responsibility has been assigned to the auditor. Now, what is the responsibility? The responsibility says that if there is any other information which is provided along with the financial statements, then the auditor should ensure that the information which is contained in those information, so this is what you can say is other information, this is again other information, so that other information, if that includes any information which is also there in the audited financial statements, so they should remain consistent. They should remain consistent. And whose responsibility is that? That is the responsibility of the auditor. So that's why whenever audit is performed, auditor needs to look at these additional information as well. Yeah. But at the same time, auditor is only checking if there is any information in this other information, or if there is any data in this other information, whether that is inconsistent with what is included in the financial statements or not. Nowhere does it mean that the auditor is auditing this or this. No. Auditor is only auditing one thing. And what is that? Can you tell me? Auditor is only auditing one thing. What is that? Financial statements. Very good. So this is the only thing which is getting audited. Understood? Now that's why if you go back and now read that, hopefully you should get more clarity. Now, if you go back and read that para, so you'll understand that auditor has clarified. Okay. So auditor is saying that that in connection with the audit of financial statements, what is the responsibility of the auditor? Only to read the other information. Only to read the other information. Okay. He is clarifying that he is not auditing that other information. Okay, so he says our opinion on the financial statements does not cover other information. We will not express any form of assurance conclusion thereon. Okay, so as regards those other information, those are only used to ensure consistency. Understood? Yeah. Clear on this, everyone? Any questions around this? Everyone clear? Great. Okay, so Neeru is clear. I'm just hoping everyone is clear. Nitin is also clear. Great. All right, so let's move further. Let's move on to the next section. Now, what is the next section? Next section talks about responsibility of the management and the board of directors. Now we discuss this. Remember, we talked about the financial statements. So whose responsibility so financial statements is the responsibility of whom? Management, or you can say the board of directors. Okay. Tambeshwari is asking MDNA is other information. Yes. So similarly, there could be various other information. We are not discussing about all of those other information. That is only an example. Yeah, but generally these are the other information you get to see. For example, corporate governance report, MDNA, directors report, okay, directors discussion. So you can just flip through annual report. You can just download any of the annual reports. As I told you, you can just do Google, download any annual report, and you can just go to the content. Maybe don't read this document, just flip through the content. You will get to know there are a lot of information which is provided. And financial statements and the auditor reports only happens to be one of the information included in the annual report. Okay, so that's how it works. Fine. Now, let's try to understand what are the responsibilities of the management. So there are a lot of responsibilities. So does it mean that all those responsibilities are required to be covered? And a question may arise that this is the report of the auditor. Okay. If the auditor is giving his report, if auditor is explaining that financial statements are free from material misstatement, all of these things he has been doing, then what is the need of this section? Yeah, any thoughts from your side? Why do you think this section could be relevant? Over to you. Though we have not discussed as to what does it include, but I'm sure you would have understood that it talks about management responsibility. So any thoughts why it could be relevant? Why is it required to be given at all? Or do you believe it's relevant? It may or may not be there. Tell me any thoughts if you have. Hardik is saying because preparation of the financial statements is management responsibility. But why is that required to be given? Very good. Pranav says because this section will clarify that auditor is relying on the management's prepared financial statements. Yeah. Ajay says it will clarify. See, it's very important. And we discussed that each and everything in the audit report has to be laid out in a very clear manner. Yes or no? So tomorrow, nobody should get confused that these financial statements are the responsibility of whom. On respect of these financial statements, if you talk about the controls of the company, if you talk about anything which has been involved or any activity, any process which has been there in as regards the financial statements, so that is the responsibility of the auditor. One should not get confused. So that's why what is it that the auditor will do? Auditor will very clearly bring out in his audit report that please understand. Okay, so he'll reach out to the users, stakeholders, that look at this section very carefully. Yeah, I have not prepared anything, I have not done anything in relation to the financial statements except the audit. So all of these things are done by whom? It's the management or the board of directors. Okay, so let's read this. Okay, company's management and board of directors are responsible for the matters stated in Section 134(5) of the Act, Companies Act, with respect to, so what is this section? Preparation of these financial statements. Okay, which give a true and fair view of state of affairs, profit and loss, yeah, changes in equity, cash flow, etc., including the accounting standards specified under Companies Act. This responsibility also includes maintenance of adequate accounting records in accordance with provisions of the Act for safeguarding the assets of the company. And it further says for preventing and detecting frauds and other irregularities, selection and application of appropriate accounting policies, making judgments, estimates, that are reasonable and prudent. Further, please understand, it's very, very important. Design, implementation, maintenance of internal financial controls. Okay, all in relevance to the preparation and presentation of financial statements. Further, he says, in preparing the financial statements, management and board of directors are responsible for what? For assessing the company's ability to continue as going concern, disclosing matters related to going concern, using going concern basis of accounting unless board of directors either intends to liquidate the company or to cease operations or has no realistic alternative but to do so. Then he says board of directors is also responsible for overseeing the financial reporting process of the company. Now in this case, if you look at the financial statements, see, financial statements is what? It's an outcome of one of the process of the company. And what is the process of the company? You can say financial reporting or financial statement closing process. So as around that process, it's not only the clerical exercise wherein the accountant will sit and prepare. There are a lot of items which are there in the financial statements over which controls are required to be exercised by the management. Yeah. So auditor is commenting on each and every such thing, that all of those things were the responsibility of the management and the board of directors. So they have been responsible for this. Yeah. I have not been responsible for all of those processes. Clear on this? Yeah. So in this case, auditor is clarifying all of those things in a very, very clear manner. Okay. Everyone clear? Any questions? Yeah. All right. So now, as a next step, what the auditor will do is, now the auditor will complete the section. You remember in the basis for opinion, auditor had given a reference of his responsibilities. Yeah. In that section, auditor had referred that if you want to look at my responsibilities, means auditor's responsibilities, then further in the report, means in the same report, there is a separate section over which you can go and understand that in greater detail. So now comes that section. Okay. So let's try to understand as to what does this section covers. Now please understand, auditor's responsibility is again not a one-liner, that is to audit. Okay. It will again involve lot of activities because audit in itself is a process. So that's why all of those things, the way auditor is clarifying about the management to the users, same way auditor needs to also clarify about himself to the users. Okay. Yeah. So let's try to understand this. Auditor says our objectives. So in what context this R has been used? For the auditor. So everything that we are talking about right now is for the auditor. So our objective are to obtain reasonable assurance. So the first thing that the auditor is starting with is the objective of the audit. So auditor is clarifying that what was the objective of this audit? To obtain reasonable assurance that the financial statements are free from material misstatement. Okay. Reasonable assurance. Now somebody may say, what is reasonable assurance? So that is also explained. So he's explaining what is a reasonable assurance. So he's saying it's a high level of assurance, but it is not a guarantee. It is not a guarantee. So can you see this? But it's not a guarantee that the audit will always detect material misstatement, because some of the material misstatement may also go undetected. Why? Because that's the inherent risk. Okay. Then he says that these misstatements may arise from fraud or error. Means they could be intentional or unintentional. Okay, and are considered material. Now he is trying to explain material, because you and I understand what is material, but let's talk about a user which is a layman. He may not understand all of these technical terms, so that's why all of these things are now explained. So he's saying misstatements are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of the users taken on the basis of financial statements. Okay, then he is continuing on his responsibilities. So all of these are the responsibilities. So let's understand all of these responsibilities one by one. First, he is saying we exercise professional judgment and maintain professional skepticism throughout the audit. And now he's also explaining the steps. We also identify and assess the risk of material misstatement. So in a way, it's going to be a revision of your various chapters. Huh? So all of these things you have covered or not? Tell me, you would have covered or not? Yeah. So during the course of this audit discussion, there are a lot of things you would have covered. Yeah. So all of these things are now required to be explained. Yeah. So that doesn't mean that the auditor will write essays, but to some extent, he'll explain all of these things. Okay. So he's saying I identified, assessed risk of material misstatement. Okay. So that I can design and perform audit procedures. Okay. So that I can obtain audit evidence that is sufficient and appropriate. Okay. Then he says obtained an understanding of internal control. Remember planning. Yeah. So he's talking about his planning. Okay. Then he said evaluate the appropriateness of accounting policies, reasonableness of accounting estimates, related disclosures. So he's saying all of these things which have gone into the financial statements, be it accounting policies, accounting estimates, disclosures, all of those have been evaluated by us. Yeah, so that is what auditor is saying. Yeah, Kiran, I'll come to your query slightly later. Huh? Then he said, along with this planning and execution, I also did the conclusion. Yeah, so remember the conclusion stage. So he's saying we the board of directors use of going concern basis of accounting means whatever they have applied. So we have concluded on that. Okay. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report. The section that we just discussed about going concern material uncertainty. Our conclusions are based on audit evidence obtained up to the date of this auditor's report. Now, this is again very, very important. I'll talk about it. However, future conditions and events may cause the company to cease to continue as going concern. So I'll talk about it slightly later. Evaluate the overall presentation structure content of the standalone financial statements, including the disclosures. Okay. Then he also says, we communicated with those charged with governance. Can you tell me who are with those charged with governance? So what do you mean by those charged with governance? Quickly, over to you. What do you mean by those charged with governance? For whom is this referred? Great. So Hardik is saying audit committee and board of directors. Yes. So that is what you meant by those charged with governance. Okay. So he's saying that wherever required as per the auditing standard, we communicated with those charged with governance. Okay. Then he says, we also provide those charged with governance with a statement that we have complied with ethical requirements. Now, this is very, very important. So, even if you go back to that basis for opinion, auditor talked about it. But still, because he is now explaining all of these things in detail, so you should not consider it's a duplication. He is now explaining all of those points. Okay. Then he says, from the matters communicated with those charged with governance, we determine those matters that were of most significance in relation to the period under audit. And therefore, if there were any key matters, we have also explained that. So he's talking about key audit matters. Yeah. Yeah. Okay. So now, in this case, what the auditor has tried to do is, auditor has tried to capture all the responsibilities, all the activities that he has performed. Yeah. But please remember, it's not going to be a sort of checklist which the auditor will provide over here. Okay. It's not going to be a kind of checklist. It's something which the auditor needs to comment on in, of course, detail, but at the same time in a summarized manner. Yeah, wherein he'll just try to capture all of those points. Now, there's one important point that we have discussed. So let's quickly talk about that. Now, this is again very, very important. Though you will be familiar with this, but let's try to discuss this. See, if the audit of financial statements is going on, say for 23-24. Okay. So what will be the reporting year? So reporting date, sorry, it will be 31st March 2024. Yeah. Let's suppose it's been agreed, it's been decided that 31st July 2024 will be the date when the board of directors meeting will be convened, wherein the financial statements will be approved, adopted, or finalized. Yeah. So now, every time when the audit is performed, so what will happen? There could be certain transactions, events which may take place after the reporting date. Yes or no? In fact, there's also an accounting standard which talks about it. And the auditor will take care of any such events, transactions also. Why? Because till the time the audit is not completed, the financial statements are not adopted, authorized for issue. If there is any such event transaction, he may be required to incorporate by recognition measurement or maybe by disclosure in the financial statements. But if something happens after this, will the auditor be held responsible to incorporate any such event in the reporting year? Tell me. Tell me. So anything which takes place after 31st July, will the auditor be responsible, or should the auditor be held responsible for that? Dilip says no. Tambeshwari says no. Very good. Why? Because there is a cutoff. What is the cutoff? This is the cutoff. This also happens to be the date when the audit report will be signed, when the financial statements will be signed, when the financial statements are finalized and approved by the board of directors. Okay. And that is the point which auditor has also clarified in his responsibilities. Okay. Everyone clear on this? Yeah. All right. So let's quickly go back to that report. Okay. So after this section, there's one more section which talks about other legal and regulatory requirements. We can just cover this other legal and regulatory requirements later on. Okay. So I'll not move to this because I don't think we have too much time to cover this part. So I'll just skip this section. Okay. We'll cover this anyways later on. Now, after this section, what do you have? After this section, auditor is required to sign the audit report. Okay, where do you get to see this? Yes, over here. Because it's the printed version, so that's why signatures are currently not given. Okay. So the audit firm which has audited, registration number of the firm, a name of the engagement partner who will sign, all those information are required to be given. Date when the audit report is signed, place where the audit report is signed. Yeah. And there is another very, very important point, and that is called as UDIN. What is the full form of UDIN? It's a unique identification number. Okay. It's a unique identification number. Now, what is the relevance of this? See, every time auditor will sign a document, so what will happen? Auditor will have to create a record of such report on the portal of ICAI. And once that is created, what will happen? You can say a kind of code is generated, or you can say a unique coding is generated. That is what you call as UDIN. That is also required to be mentioned on the audit report. If the UDIN is not mentioned on the audit report, so what will happen? That will be considered as if it is invalid. Understood? Yeah. So all of these are very, very important components of the audit report. All right. Yeah. So any questions, any doubts if you have, because after this, we'll just try to look at some examples. Huh? Any questions, any doubts? Hardik is asking, sir, it is not obligation, but if it is significant, then the auditor will amend it. In what context you are asking? I think you need to just elaborate on this point. Okay, so Kiran is asking, sir, TCS is a global company which is listed in New York. So for compliance of IFRS, yes, of course. See, every set which goes. So if it is on Ind AS, there will be a separate audit report, which is for local reporting requirement. If there is another set of financial statement which is prepared, then of course there will be another audit report. Yeah. So that's how it works. And that is something which you can see that will be available most likely in the public domain. Uh, Shini is asking, sir, for consolidated financial statements, what would be the requirements? Same. Okay, the format of audit report will be largely same, except for some of the components which are required to be captured in relation to the components which are audited. Otherwise, largely it's same. Huh? Anyways, I believe that is not really relevant at the current level. Okay. Niru is asking, sir, how to find the auditor annual report in Google. So you can just need to find annual report of the company. Okay, so you'll not find that for the auditor. Let's suppose you are looking for, say, Airtel. So you can write annual report of Airtel. So that's how you can do. And of course, the year. Huh? Tambeshwari is asking, okay, so Tambeshwari is asking financial statements issued after the auditor's responsibility. Sorry, you are not clear. Huh? Hardik is asking, sir, it is not an obligation, but if it is significant, then the auditor will amend. Again, I'm not clear on your query. Huh? Pallavi is asking, sir, the auditor who signed the report is responsible. Then why in audit report the word we used every year? Because uh, see, it's about the firm which has been appointed as the auditor, and the engagement partner is representing that firm. Okay, because this is the audit firm which is doing the audit, which is performing the audit. So that's why that word we is used. Clear? Kitchen is asking in other information section whether we can mention other auditors audits the see, that is in the context of consolidated financial statements, and that will not come in other section. There is another type of report which is on other matter. So that is something we are going to cover later on in our subsequent sessions. We'll talk about it. Don't worry. Apurv is asking if after the audit report any significant event occur, then the audit report will change. See, if the financial statements are approved, audit is closed, everything is done, Then of course, if anything happens later on, if no change in the financial statements is required, then the audit is closed. So why will you change the audit report? That will have to be looked at in the next year only. Yeah. Okay. All right. So let's quickly look at one example. I think we can just look at one example. So here again, what I'll do is I'll just move to your study material only. Okay, maybe what we can do is discuss is some of the points around this situation. So let's look at this question 5. Diamond Shine Limited is a company engaged in the manufacturing of detergents. Bright and Associates are the statutory auditors. Explain how the para related to management's responsibility will be drafted. So I think instead of just drafting the para, I don't find that to be appropriate right now because it will be very difficult for you to share. Can you just give me some of the pointers? Okay, some of the aspects which the auditor should ensure are covered in the management responsibility para. Over to you. Over to you quickly. Yes, just the pointers will work. Huh? Okay, just the pointers will work. Okay, so Pranav says management has complied with section 134. Great. Means about the preparation. Very good. Nitin is saying cash flow, financial performance. Okay, so I think you're talking about the components around the preparation. Great. Hardik is saying preparation of financial statements, internal control, how they have evaluated the going concern. Very good. Tambeshwari is saying true and fair financial statements. So I'm just understanding that in the context of preparation. Huh? Great. Then I think Kasak says audit report is prepared according to the no. So audit, no, it's not about audit report, it's about management responsibility. Yeah? So that is what we need to comment on. Then I think Ajay is saying we are only expressing opinion on the management. Okay, so you are trying to convey the point around the preparation of the financial statements. Great. But I think you need to go beyond this preparation because every time you are focusing only on the preparation, there are a lot of things which are required to be looked at other than the preparation. For example, selection of the accounting policies. Okay, so the internal controls the company will have. Yes or no? Yeah, appropriateness of that. Assessment in relation to the going concern. Yeah, great. Amit is saying, for example, whether the appropriate accounting policies and of course estimates. Very good point by Amit. Yeah, Manvi is saying assessment in relation to the ability to continue as going concern. Very good. Then I think Nitin is saying about the judgments, means making judgments, making estimates. Great, very good. Yeah. So again, a very important and relevant point. Kasak is saying, for example, the method of inventory valuation. Yes, of course, that is all about the accounting policies in a way. Yeah. Tambeshwari is saying as around the internal controls in respect of the assets, whether those are safeguarded. Yeah. So all of these are the responsibility of what? Of course, the management. Yes, that's correct. Absolutely correct. Yes or no? Yeah. So great. All right. So then I think what we can do is maybe now we can just close our discussion for today. But I understand you'll have some questions or doubts. So what we can do is maybe you can spend some time on your questions and doubts now. Okay. So we'll not take up anything further. Now what I'll do is I'll just move on to your questions or doubts. Yes. So I can see something from Shrini right now. Okay, so she's asking, sir, whether we can disclose any annexure as part of the audit report. If yes, please mention some document names. Yes, there are some annexures that you are required to disclose. We'll talk about it. Okay, so as of now, please understand, we have just started off and we have just discussed the basic aspects of the audit report. That's it. Yeah, so there are a lot of things in the audit report which we are required to cover. Yeah, so we'll cover that in our subsequent sessions. Dilip is asking if the financial statements are revised by the company, then will the same auditor audit the new financial statements? So, what do you mean by revision here? So, when you say revised by the company, what is the meaning of revision? So, are you talking about any, is it about the reopening, or are you saying that the financial statements are still in the process of getting prepared? They are not yet adopted or approved, and the audit is going on and changes are taking place? See, in that context, please remember anything which is, so you are talking in the context of reopening. See, if you will reopen, so in that particular year, you'll have to look at as to who is appointed as the auditor. Okay, because that reopening will take place subsequently. Yeah. At that point of time, you'll have to look at. Okay, not necessarily the same auditor. Uh, Tambeshwari is asking how the UDIN is made in the format of number. So it's not only a number, it's a combination. So some alphanumerics are there, then some numbers are there. So it's a combination. ICAI issues this. So you can say there's a portal, ICAI issues this. Okay, so that's how it works. Okay. Hardik is saying, can you please tell the difference between internal financial control and internal control? Sure, I think that's not really relevant to the topic that we covered, but quickly on to your query. See, internal control is a wider term. For example, if you talk about a company will have a lot of activities. For all those activities, it will have to have control. But some of those activities may have impact on the financial statements. Some of them may not have impact on the financial statements. Now, the controls which are there in respect of financial statements, that is what you call as internal financial control. But internal control includes both financial as well as non-financial. Now, what could be a non-financial? Say there's a company, okay, which is currently running at 60% capacity. Okay, so they have a plant which is running at 60% capacity. Okay, now if the management wants to set up a control that this plant should run at 70% capacity. Okay. Now, in this case, if the plant is running at 60% capacity, so that is getting recorded in the financial statements at 60%, or if that will function at 70%, that will also produce accordingly, and the inventory or the production will be recorded accordingly. Okay. So, as far as the outcome is concerned, there's no impact on the financial statements. Yeah. So, that's why the control around this, what will you call it as? Non-financial. Okay. Or for example, if there is any control as around the efficiency of the employees, that is again what? Non-financial. Shini is asking, can you please explain real-time challenges in preparation of audit report? I understand you mean to say real life challenges. Okay. So real life challenges are quite a lot. Okay. And why is that so? Because see, it's all based on judgments. And please understand there's a great risk involved. Why? Because if something goes wrong, then there are a lot of stakeholders which are involved. Yeah. So to draft this audit report is more of a, I would say, clerical exercise. But to come to the conclusions and to form an opinion, that is something which is extremely challenging. And what is the challenge around it? To ensure at the first place whether the audit is performed in an appropriate manner. And if that is done, whether the conclusions are drawn in an appropriate manner or not. Yeah. For which you need a good level of planning and, of course, a great supervision. Okay. But it's very, very difficult to comment on this because it's all a process. So if the process goes well, the outcome will, of course, be great. If the process doesn't go fine, then the outcome may or may not be impacted. Yeah. Asha is asking if the auditor finds any material information from the other information provided by the management. Yes, of course, then he'll have to inquire from the company as to why there are inconsistencies. I understand you are talking about inconsistency. If there is any such inconsistency, he'll have to understand He'll have to get into the rationale as to why that has been created, and accordingly he'll have to design his audit process. He may want to rework on some of the things. If at all reworking is required, he will have to do that. And if he is not satisfied, if there are any errors which he observes due to this, he may have to report that. Yeah. So that's going to be the consequence. Okay. All right. Any more questions? No. All right. So then I think we can just close our discussion for today. Yeah. Thanks so much, everyone. Uh, thanks so much for your time and for this wonderful participation. And in the next session, we are going to continue from here. And that's why it's very, very important that whatever we have covered today, you revise that. Okay. Because please remember that audit in itself is a closely interrelated activity. So everything that you cover in audit, it's quite interlinked, particularly when you talk about this audit report. Okay, so we are not yet done. There are a lot of things which are going to flow, and a lot of points that we have covered today, we are going to use that in our next session. So that's why it's important that you stay connected to that, and that's possible only when you revise. Fine. Yeah, so make sure you revise before we meet next. Okay. So thanks everyone for this wonderful participation. Thanks so much. I think Manish, we can close this now. Thanks.